Good evening, everyone. You can thank Mario Draghi for today's stock market records. Investors bought up stocks after European Central Bank President Mario Draghi announced early this morning a batch of stimulus measures to boost Europe's economy and to encourage banks to lend more in the Eurozone. That led to market rallies here on Wall Street and all around the globe. The Dow rose almost 100 points, closing at a fresh record of 16,836. The Nasdaq gained 45 points, and the S&P 500 added 12.5 points to the new record of 1940. Jeff Cutmore is in Frankfurt, Germany, and has more on those moves by Draghi.
What we saw today was classic Draghi at the ECB. A little bit of jam today and a lot of jam tomorrow. So let's talk about the details today. The key moves were in the interest rates. That ultimately now sees a negative deposit rate here in Europe. The other big announcement was related to what they call LTROs. These are longer-term funding programs. It's a way of squeezing money into the banks to try to encourage them to lend into the real economy. And credit expansion is the real issue when it comes to Europe at the moment. So those were the two major points. The jam tomorrow really relates to full-blown QE or some kind of bond buying program. Mr. Draghi didn't have much new news on that. He effectively said they are still working on a program. But we know, given the European Central Bank's mandate, deciding which bonds to buy is the real dilemma. So work currently being done. As far as the package is concerned, Mr. Draghi said this is not it. There is the potential for more to be done.
We think it's a significant package. Are we finished? The answer is no. We aren't finished here.
So for the time being, the markets seem prepared to take the announcement. We got a spike higher in the German exchange, the DAX, and an initial sell-off in the euro. Both of those moves will be something that Mr. Draghi was pleased to see. For Nightly Business Report, I'm Jeff Cutmore in Frankfurt.
And Nick Colas joins us now. He's Chief Market Strategist with Convergex. Nick, welcome. We heard Jeff Cutmore say that the idea here is to get money into the real economy. Will it work, and why should I care if I'm an American consumer and an American investor?
Well, the answer to the first part is it should work over time. As you heard from that segment, we're looking for not just this package, but a lot more along the way. Europe faces two critical challenges, a very slow economy, but also deflation and deflationary threats. These programs are meant to alleviate those risks. As far as why we should care, I think we saw that in the stock market here in the U.S. today. It does improve stock prices here in the U.S. as well as those in Europe, and that's beneficial for our economies as well.
You know, Nick, we just heard Mario Draghi saying that he's not finished yet here, referring that they're going to be doing, preparing for some asset purchases down the road. Why didn't they just do that today? What are they waiting for?
Well, as we heard, there really is a challenge in the ECB about which bonds do you buy. Do you buy Italian bonds, Spanish bonds, German bonds, and what effect does that have on the local economies? They've still got to work through those issues. So what we heard today is that it's basically a work in progress. Very good program today, and hopefully more to come.
Why, Nick, did stock prices go up here in the U.S. in response to this? I hate to be a little thick here, but I assume it's because if the European economy is stimulated, that means Europeans will buy more American products.
That's right. If you look at the average large cap U.S. stock, the kind of stocks that are in the Dow or the S&P 500, on average, about 20 to 25% of their revenues come from the European market. So anything that stimulates that market from the depths of what is still a very sluggish recovery does benefit U.S. earnings as well.
Mm-hmm. I hate to sound any, warning signs here, but what are the risks here? Is it possible that this whole European plan can turn out to be like what happened in Japan, the lost decade, no growth? And what would that mean for us?
That really is the risk here. You put your finger on it exactly. The risk is that even with the best efforts of a central bank, you still face a lot of headwinds in Europe, from everything from labor regulation to an aging demographic, just as you did in Japan. So the risk here is that even though the central banks of the world are doing their level best, there's still a lot of headwinds even on top of the good news we got today.
Nick Colas, thanks very much. Nick is with Convergex.